In July, South Korea's stock market had its worst month since 1990 and its single best day on record. The same month, one of its biggest technology names lost almost half its value, and more than 1 million retail investors got margin calls, most of them in their 20s and 30s. For clarity, figures in this video are rounded, and amounts are in Korean won unless specified otherwise. Let us count down the 10 biggest falls. At number 10, Samsung Electronics fell 21% in a month when it posted the largest quarterly profit in its history, with operating profit up more than 1,800% compared to last year. At number 9, POSCO Future M dropped nearly 22%, which likely reflects the broader cooling across Korea's battery materials complex rather than anything specific to the company. At number 8, Hyundai Motor fell 22% after second quarter operating profit dropped 21% and global sales slipped, and 19 of 20 broker reports that month cut their price targets. At number 7, Samsung Life Insurance slipped just over 22%, a move that probably says more about the falling value of its Samsung shareholdings than about its insurance business. At number 6, Doosan Enerbility fell nearly 23% in the same month its order backlog reached a record 26 trillion, with brokers cutting targets only because global nuclear peers had re-rated. At number 5, Hyundai Rotem lost 23% after second quarter operating profit fell 10% and missed forecasts, as lower margin domestic tank production crowded out higher margin exports. At number 4, Samsung C&T fell 25%, despite reporting revenue of 12 trillion and operating profit of 1 trillion, both higher than a year earlier. At number 3, HD Hyundai Electric fell 30% in the very month it raised its annual order target by 23% and signed a 1 trillion won power contract for a North American data center. At number 2, SK hynix fell 35%, and its story explains most of the month. On July 10th, it listed American depository receipts on the Nasdaq, raising around 45 trillion for about 2.5% of its shares. Those receipts jumped 13% on their first day. Then the following Monday, the Seoul shares fell 15%, the largest single-day drop in the company's history, as investors took profits and argued about which of the two listings was priced correctly. At one point, the gap between them was more than 20%. The leveraged fund built on SK hynix fell more than 80% from its June peak. At the end of the month, the group chairman had disclosed that he was buying shares. And on the final trading day, SK hynix hit its daily upper limit. And at number 1, Samsung Electro-Mechanics fell 48%, the worst performance in the index. If that name sounds familiar, it should. In May, it was the best performing stock on this same leaderboard, up 156%. This time, there was no bad news. The company makes the tiny ceramic capacitors and package substrates that sit inside AI servers, and demand for them did not fall. Its factories, and those of its main Japanese rival, have been running above 90% capacity for 4 straight quarters, with no sign of anyone adding more. Through the middle of the month, one major Korean broker kept a buy rating and a 3 million won price target, while the shares traded in the 1 million range, saying the shortage would persist. What changed was not the business. It was what investors were willing to pay for it. On July 30th alone, the stock dropped 15%, sliding to 8th place by market value. And on the other side of the leaderboard, Meritz Financial rose 17%, the best performer in the index. There was no company news to explain it, and its results were not due until August. It rose because money was leaving the AI trade and looking for somewhere calmer to sit. Here is the number that frames the month. Analysts' profit forecasts for the KOSPI fell by less than 0.5%. The index fell about 35%. On the final day, it rose 18%, its biggest day ever. And the investors forced to sell on the way down were not there for it. Like the video, subscribe to Global Market Series, and tell us in the comments, warning or opportunity. Thanks for watching, and see you in the next video.